Welcome to the definitive cryptocurrency masterclass for 2026. Today we are going to map out exactly how you can build a trading engine that generates $7,000 in profit every single month. This isn't about luck or get-rich-quick schemes. This is about professional-grade strategies, institutional-level tools, and a structured roadmap designed for the modern financial era. Before we begin our deep dive, make sure to subscribe to the channel and turn on notifications so you never miss a 2026 market update. By 2026, the cryptocurrency market has transitioned into a mature $4 trillion ecosystem. It is now a core pillar of the global financial system. Following the massive regulatory shifts of 2025, we've moved past the era of wild speculation and into a period of deep institutional liquidity. The landmark Genius Act of 2025 was the catalyst. It provided the clarity needed for institutional giants to enter the space with confidence. This regulation brought standardized compliance, making it safer for retail traders like you to participate in a fair and transparent market. With over 100 crypto ETFs managing hundreds of billions, Bitcoin and Ethereum have stabilized into global macro assets. This stability is a double-edged sword. While volatility is lower, the opportunities for consistent, predictable profit have never been better. Step 1 of your $7,000 roadmap is establishing your secure infrastructure and 2026 compliance stack. You must start with a foundation of security. In 2026, this means using only licensed exchanges that comply with the latest digital financial laws. We recommend a hybrid approach. Trade on liquid exchanges like Coinbase or Kraken, but move your long-term earnings to self-custodial hardware wallets. For your core savings, consider multi-signature security. It ensures that even if one key is compromised, your capital remains untouchable. Compliance is now automated. Modern platforms track the de minimis tax exemptions, allowing small consumer trades to remain tax-free. Using automated tax integration is essential. It saves you hours of manual work and ensures you stay on the right side of the evolving 2026 regulations. Step 2 is capital allocation and strategy selection. This is where we define exactly how your money will work for you. We use the core satellite model. This structure balances long-term stability with the high growth potential of active trading. 70% of your portfolio is your core. These are low volatility assets like Bitcoin and Ethereum that provide a solid foundation. The remaining 30% is your satellite. This is where we deploy active trading strategies and AI bots to generate that monthly alpha. For example, in a $100,000 portfolio, $70,000 would be in core assets and $30,000 would be actively traded. To reach $7,000 a month, we target a 7% overall monthly return, primarily driven by the satellite segment's performance. Crucially, you must follow the rule of 1%. Never risk more than 1% of your total capital on a single trade. Always use automated stop loss and take profit orders. In a market that trades 24/7, your automation is your best defense. To trade effectively in 2026, you must understand on-chain fundamentals. We track real economic value and transaction fee trends. Steady growth in active addresses often precedes price appreciation. This data gives you an edge over purely technical traders. Step 3 is mastering 2026 trading modalities. We'll cover spot, perpetual futures, and the rise of copy trading. Spot trading is the foundation for any beginner. You're buying the actual asset, profiting as its value increases over time. Strategies like dollar cost averaging and trend following are perfect for spot positions, minimizing your exposure to short-term noise. Perpetual futures allow you to profit in any market direction. You can long a breakout or short a breakdown to capture gains regardless of trend. In 2026, we stick to conservative leverage, typically between 2 and 5 times. This amplifies your results without risking a total wipeout. If you're just starting, copy trading is a game changer. It allows you to automatically mirror the moves of top-tier professional traders. This allows you to benefit from their market expertise and risk management while you are still learning the ropes yourself. Step 4 is automated AI trading and bot management. In 2026, automation is no longer optional for retail traders. Institutional traders use sophisticated algorithms. To compete, you must deploy AI bots that monitor the market and execute your strategy 24/7. Grid trading bots are essential for sideways markets. They harvest profit from natural price volatility by placing a grid of buy and sell orders. These small, frequent gains compound quickly, often providing a steady 3 to 5% monthly return in stable conditions. We also utilize agentic hedging. These advanced AI agents monitor for high-probability crash signals and automatically move your capital to safety. This automated protection is critical for beginners, ensuring that a sudden market cascade doesn't wipe out your hard-earned progress. Step 5 is capturing high-growth alpha through emerging 2026 trends. This is where we look for the next wave of massive adoption. The tokenization of real-world assets is a multi-trillion-dollar opportunity. We are now trading tokenized private credit and treasury debt on-chain. This allows you to diversify your crypto portfolio into traditional markets, gaining exposure to stable, real-world returns without ever leaving the ecosystem. The intersection of AI and crypto is another massive growth area. We focus on protocols that provide decentralized compute power for AI training. As the demand for AI grows, these decentralized infrastructure protocols are becoming essential, creating high-conviction opportunities for early traders. Prediction markets have also surged in popularity. They allow you to profit from your insights into real-world outcomes, from politics to economic data. With institutional-grade liquidity, these markets are now a reliable venue for sophisticated traders to capture alpha from global events. Now, let's look at the specific blueprint to reach that $7,000 monthly target. It's all about diversifying your income streams. Your foundation is passive income. Ethereum staking and stablecoin lending provide a reliable baseline, typically generating $500 to $1,000. Automated grid bots on your satellite funds are the primary engine, targeting around $2,500 through volatility harvesting. The remaining $3,500 comes from high-conviction active trades in RWA, AI protocols, and trend following in the perpetual markets. Let's look at a real-world case study. How do you turn a $10,000 starting portfolio into the $7,000 monthly engine? Months 1 through 3 are about setup and education. You establish your core and deploy your first conservative bots to learn the mechanics. In months 4 through 6, you begin to scale. As your bot performance stabilizes, you introduce active swing trading with strict risk management. By month 7 to 12, your system is optimized. Compounded gains and refined strategies bring you to that consistent $7,000 monthly mark. But remember, the most advanced tools mean nothing without discipline. You must treat trading as a quantitative business, not a gamble. You must learn to ignore the noise and avoid FOMO, the fear of missing out. Stick to your plan and your predetermined risk levels at all times. Emotions are the enemy of profit. Successful 2026 traders use data and automation to remove human bias from their decision-making process. Let's talk about the risks. Even in a regulated market, sudden liquidation cascades can happen. You must be prepared for the worst-case scenario. Market cascades occur when over-leveraged positions are liquidated simultaneously. This is why we stick to conservative leverage and strict stop losses. Regulatory friction is another risk. Always stay updated on your local laws, as state-level requirements can impact your ability to trade certain assets. Traditional technical patterns are often targeted by institutional bots. We look for pattern failure as a more reliable signal in the modern market. This is why backtesting is mandatory. You must verify that your strategy works in historical data before you risk a single dollar in the live market. Use automated tools to simulate thousands of trades. This gives you the statistical confidence needed to stick to your plan during periods of drawdown. The market is always evolving. You must continuously refine and retest your strategies to ensure they maintain their edge in the 2026 ecosystem. Let's recap your $7,000 roadmap. Secure infrastructure, core satellite allocation, mastering modalities, AI automation, and trend alpha. Following this structured approach is what separates the top 5% of traders from the rest. It is a marathon, not a sprint. Choose the strategy that best fits your risk tolerance and lifestyle. Whether you are a beginner or an active trader, the 2026 market has a place for you. The future of finance is here, and the opportunity is yours. Start today, stay disciplined, and build your $7,000 monthly engine. If you found this roadmap valuable, please like the video, leave a comment with your questions, and subscribe for more in-depth 2026 guides. Thank you for watching. As a bonus, let's look at the projected 2026 cycles. Understanding macro timing is the final piece of your $7,000 monthly puzzle. Identify the institutional accumulation zones. Buying when the big players buy gives you the highest probability of catching the next major leg up. Every month, conduct a performance review. Adjust your bots and rebalance your portfolio to stay aligned with the changing market landscape. Remember, every professional was once a beginner. The tools of 2026 have leveled the playing field. Now it's your turn to play. Thank you for staying until the end. Your support allows us to continue creating these in-depth guides. We'll see you in the next masterclass. Good luck with your trading journey. Stay safe, stay profitable, and we will see you on the moon. Goodbye for now.